Our scripture morning is found in the first book of Timothy, chapter 6 and verse 10, which reads, "For the love of money is a root of all kinds of evil, from which some have strayed from the faith in the greediness, and pierced themselves through with many sorrows." Lord, may we be mindful of this and not be lovers of money. Note that the love of money is a root of all kinds of evil, not the root of all kinds of evil. There are other roots of evil as well. The title of today's message is The Magic Money Tree. Many people wish there was such a thing as a money tree, one whose leaves were currency, some form of money that could be spent. But this is a fantasy. No such thing exists. And if it were to exist, the leaves probably wouldn't be worth a whole lot unless only a limited number of people had access to it, because if everybody did, well, it would be common. The leaves would be cheap. They wouldn't have value because there would be so many of them. The reason money has value is because there's limited amounts of it in circulation and people value it. There's a financial institution called the money tree. There's also a lottery called the money tree in Minnesota. This is a concept that people tend to like. But do you believe? Do you believe there is such a thing? There might be such a thing, or maybe you want one. Lord, help us not to be chasing after this thing. Let us instead be willing to work for what we need or want, and then we can value money, and people can value our efforts. Now, there is a plant called a money tree. It has a very interesting trunk, which is composed of several intertwined stems. As this plant grows older, as you might expect, these stems become larger and woodier. There's also a Chinese version, the Chung Fui money plant. But all these plants just have ordinary leaves. They're not spendable at the store or any place. They're just attractive green plants. In practice, what a magic money tree really is the practice or ability to spend money which you don't have, deficit spending, not having to balance a budget, giving away goods without income or tax money to pay for it. And this is something the United States has been practicing for a while because the American dollar is the world's reserve currency. One application of this would be a universal basic income, which is an idea some people think should be put into practice, namely that everybody in society or country will be given a minimum check to amount to a minimum income, so nobody would be in want. But there's no obligation to work for this, to do anything productive or useful, even community service. Currently in the United States, we've gone through several rounds of stimulus checks, which leads people, being the natural greedy selves, be asking, how much? When we get it? Who gets it? What if I missed? These are unnatural questions, friends. And they come on top of the fact that the United States has a federal budget which for FY 2021 is humongous. It's close to $5 trillion, the biggest ever. And that's no surprise. Politicians want to spend money. People want them to spend money. So budgets tend to keep growing and growing. But there's a big problem here. There's a shortfall of close to $1 trillion, roughly 20% of this budget, which there's no money for. There's no taxes for. So where does it come from? It comes from debts which are sold, called treasuries, which the government markets and, of course, pays interest on, just like any other kind of loan. The federal government has a limit as to how much debt it can have out at one given time. It's called the debt ceiling. It wasn't long ago that there was a lot of noise, political noise that is, and commotion about increasing the debt ceiling. It's a pretty important number, but at the present time it doesn't get much attention. People kind of take for granted that it's a big number, it's going up, and like it doesn't matter. Well, friends, it does matter. It represents debt that has to be paid, upon which interest has to be paid. The recent rounds of stimulus checks have been in different sizes, $1,200 and $600. They authorized $3.5 trillion of expenses earlier, which is, again, a stupendous number. It's roughly two-thirds of the new federal budget, including the portion that's not funded by revenues or tax monies. Now, recently in America, people receive $1,400 checks for Total about $1.9 trillion of additional money spent out of thin air for which the federal government doesn't have the money. They're selling debt and they're going to pay interest on it. This is just totally irresponsible. But people think there is a money, at least the politicians in Washington think, and some other people, that there's a magic money tree that they can spend from. Many people think, I need help. The pandemic is hurting me. And I'm okay with my tax dollars doing that. Well, there's a problem here. It's a false idea that your tax dollars are paying for it. They are not. And another false concept is that it's tax dollars, your tax dollars. It's not only tax dollars at all, but what people want the federal government basically to do is to take someone else's money and use it to benefit them. It's not their tax dollars. They don't want to be paying taxes, but rather tax dollars of someone else, usually, categorically speaking, the rich. What's money? Money is something which we can represents value or may have value itself. Initial forms of money were coins like gold or silver. Later on, when printing technology became rather sophisticated, paper currency was used, which was convertible to something of value, like silver gold notes as we used to have in America. We don't have them anymore. Then later on, there were shares in something that was believed to have a reliable value, like bonds. Some asset was sold, and the debt is, in this case, was represented by money, which is used as opposed to bonds. Currently, money in most countries is what's called fiat money. It only has value because the government says it has. It's not backed by anything of value. You cannot exchange it for anything of value. It only has value because people are willing to accept it as and exchange it for goods and services. The U.S. The history of money in the United States is a bit of a disjointed one. It originally started with private banks, and they would issue currency, which, as you might imagine, only had value in the range or the area where that bank was. New York money wasn't good in San Francisco, for example, and vice versa. Eventually, there was seen to be a need for money which is more convertible to or acceptable, in different areas of the country, nationally, not just regionally. So national banks were formed and federal banks, and eventually a Federal Reserve was formed, which has an interesting history. First of all, we had the first bank in the United States, which was formed after a lot of wrangling and back and forth among the politicians in Washington who were really doubtful about whether the federal government should be involved in such a thing. But in 1791, they formed a bank and allowed it to run until 1811. Then they shut it down. And 6 years later, the needs were still there. They formed the second bank of the U.S. and allowed it to run a few years until 1836. Then that expired for a while, for years. And then they came back at it again with the National Banking Act in 1863, which was allowed to issue banknotes based on the bonds, the United States bonds, which were held by the bank, which meant that the currency in circulation was limited by the value of the bonds held. Wouldn't it be nice if that were true today, friends? That they didn't have so much debt? So they needed, the economy needed more money than the debt they held would allow. And at the same time, with money being held in private banks, there are banking panics. Realize how banks operate. They have money, or the rich owners do, or those who make deposits put money in there, which is lent out to people who need it for purposes. And they pay interest for that privilege, which allows the bank to pay interest on the deposits and also cover the cost and expenses and make a profit, they hope. But the money obviously all can't be there because it has to be lent out to make money, which has led at times to situations or occasions when people have thought the bank was insolvent and they all demand the money, and of course it wasn't there. The solution that they came up was to have a reserve bank, a Federal Reserve Bank, which should backstop banks and be able to provide liquidity in these situations. Now, the Federal Reserve that was created it's called federal, but it's mostly owned by private banks, 80% of it. The U.S. only owns 20% of it. The way this came about was there was a confab of big bankers back in 1910, which led to the Federal Reserve Act in 1913, which allowed the Federal Reserve to be created. New York banks were dominant then, and to a fair extent still are, but there are other centers of strong economic activity, such as Chicago and San Francisco. They wanted to make sure they had their share of the action, so the Federal Reserve was divided into 12 districts, each of which would have equal representation in order to limit New York's influence. Initially, they had to hold their loans in gold at 40% level. But as you can imagine, with time, this was reduced. So there wasn't so much gold backing the currency that they. Gold, of course, has intrinsic value. It's useful for jewelry, for commercial purposes. It's extremely durable. You know, it doesn't rust or rot or anything. Different countries have taken different perspectives toward gold. Russia's been buying a lot, which means the ruble has a lot of gold backing it. China is really tight. They don't allow the export of gold at all, and they buy a lot. So the yuan or renminbi is well backed by gold. The individuals in India love gold, which has allowed the government to tax them at a high rate for the privilege of purchasing it. In England and Great Britain and other countries, there's not such a great concern on the part of the populace or of the central governments. In the United States, the situation is a little bit murky. The federal government has not been buying money that anyone's aware of. And individual Americans are currently allowed to own gold. Officially, the federal government stores all its gold at Fort Knox, which has never been audited, and they repeatedly refuse to allow this. So no one's really sure how much gold is actually there. The last report in 2020 said that they had $291 billion worth of gold at then current prices. Well, if you think about that, that's not a whole lot of money, especially when the U.S. spends trillions of dollars and has humongous debt. It's just a very small fraction. The Fort Knox is also a repository for gold for other countries. Recently, when some other countries tried to retrieve their gold, they've gotten excuses and delays and not quick responses. There have been people who analyze the actions in the gold markets, and they've wondered at times if the U.S. government was the unknown buyer that was depressing gold prices by selling onto the market. We don't know, probably may never know. Another question has been asked is all the gold real? Faking gold bars is relatively easy. There's a metal called tungsten, which is very hard and strong. It's used for tools and the like, which has a weight or density almost identical to gold, which makes it very hard to distinguish a gold-plated tungsten bar from a real gold bar, unless you drill into it or chisel into it. And in that case, because the gold is soft and tungsten is hard, you'll quickly find out. This isn't all speculation. There was a large company in China which was sold gold, and their gold was fake. That was found out, and they were run out of business last year. Who owns the Fed? There's 80% of it. It is owned by a collection of big banks, starting with Citibank, JP Morgan Chase, and a bunch of other banks that own small amounts, Morgan Stanley, Goldman Sachs, etc. This ownership of the Fed, for all practical purposes, by big banks is very useful to the Fed because they become its tools. That's how the Fed markets all this debt, the treasuries. The big banks that own it have the obligation of selling it or buying it. And the government likes this because it supports the dollar. The dollar, you realize, has been continuously shrinking in value, and it's going to continue to do so, but the federal government wants to make sure it's at a modest controlled rate and doesn't suddenly plunge. So they have what's called the Plunge Protection Team, which is a small group of bankers and the federal government that are authorized to spend ungodly amounts of money when they see necessary to protect markets. That includes, at this point, not just the currency market, the dollar, but also U.S. securities, stocks, and bonds. The U.S. wants to keep the dollar depreciating, but at a controlled, modest rate. Really hard to tell the price of real money, that is, precious metals, because the markets are extremely manipulated. For example, right now, market prices for silver are around $27. Go try to find some actual physical silver that you can buy for that price. You can't. You're going to pay several dollars more of a premium. The reason for this is, like many financial markets, there are real assets and there are paper versions of those assets which are actually traded, and that's what is held in many precious metals funds. They don't actually have metal as much as they have paper that represents metal. In the silver market, and in the gold market as well, a lot of short trades are made at times in order to depress the prices to keep them from rising. So what will happen is somebody will borrow silver, or at least on paper they have the obligation to return it in the future, so they sell it. And they've done so much of this that the short trades in silver are close to half the annual production of silver. Huge amount of manipulation. I mean, why is this allowed? It's been noted, it's been recorded. The answer is the federal government could rein it in, but they want precious metals to have limited prices because this helps prop up the dollar, which you can perceive they're fearful of suddenly depreciating greatly. One of the consequences of low interest rates is that the stock markets become highly overpriced. Who wants to put money in the largest alternative investment, bonds, when the interest rates are so low and they may go up soon, which will cause you a loss of the value of your bonds and a lost opportunity to earn greater interest rates. So this is propping up the stock market quite a lot. It's for people who have large amounts of money to invest. It seems like the best option out there. Low interest rates are having a lot of effect on the economy. They're killing savers. You put your money in the bank and you hardly get anything. You literally pennies a year, which makes you wonder, is it worth having a savings account? One of the jobs I have, I'm an accountant for the City of Philadelphia Health Department, is to reconcile a large account, which has about $1.1 million in it, but we only get maybe $30 a month or so in interest. That's a tiny amount of money. It used to be people could, relatively rich people anyway, could put money in the bank and live off the interest. Obviously, you can't do that anymore, and bonds are likewise not a viable investment vehicle for a person to live off of. Now, bonds have been crippled because of low interest rates, and retirees are struggling. They have a hard time trying to use assets, assuming one has assets of this level, in order to generate enough income to live on. And what happens with people who get very poor returns on their money? They get tempted to speculate, to put their money in risky places, which of course can backfire at times. The inflation rate that is reported to the public is very underreported. It's a deceptive number. The public is told one thing when the real number is much greater. Why does the government do that? One reason is to keep Social Security payouts down. They're a large proportion of the budget. If official inflation numbers are high, they'll have to pay out more money and the budget becomes even more stretched. So it helps balance the budget. And it also keeps interest rates down. People expect return on their money which is greater than the rate of interest. Otherwise, they're losing. They're not gaining. There are two basic fundamental economic scenarios which cause inflation. One is when the economy is hot. In that situation, there's competition. There's competition for labor. People want more laborers than they can reasonably get, so they have to pay more money for them. There's limited materials available, so prices rise. We're experiencing this right now, particularly in the case of materials. And this is reportedly because many things slowed down during the COVID period, and when when economic activity slowed down and they stopped producing materials, and all of a sudden the economy is expanding again and causing prices to rise. The other scenario is when the economy is cool. There isn't really high output or demand for labor and materials, but the money supply has gone up, which leads to more money chasing same supply of goods and services, and again, you get inflation. There are some factors we're experiencing right now which tend to cause inflation. Deficit spending is a major one. The COVID recovery. Since people are now feeling they can go out and do things, they're spending money, which is great for the economy, but it means more people spending money in an economy which isn't prepared to operate at that level, which gives you more inflation. Uh, and the government's openly promoting inflation, kind of acting like there isn't any significant inflation right now, while at the same time economists and observers are worrying, will it run away? The Wall Street Journal headline recently said everything screams inflation. And there's a lot of numbers showing this. Gasoline's up 47%, and corn up 54%. When natural gas is up, lumber's really leaped recently. Uh, One prime indicator which is used by economists is the price of copper. The year 2019 opened with the copper at 262, a little over $2.50. Now it's over 4. That's a huge leap. Copper is used for many things in the economy, for houses, for cars, especially electric cars, for electronic components of items of all sorts. So it's a good barometer of how hot the economy is. Well, we can see the economy is not really as slow as some people think it is based on the price of copper. However, at the Fed, with the various Fed heads in charge, they're pretty much in lockstep, going through a pretense that there is no significant inflation. They're like three blind mice. See no inflation, you speak no inflation, you hear no inflation. When all the facts and reality are saying, yes, we've got plenty of it. You need to be more careful about stimulating it. The government also lies not only about inflation, but about the jobs report, which is blatantly manipulated. The manipulation usually is not reported, so people don't know about it unless they dig into it. What the government does is to make adjustments to the numbers in a manner that they think is justified or where the numbers should be. This can really get out of control at times. Most recently, the BLS, Bureau of Labor Statistics, added 298,000 jobs to a total. After they'd reported, there are 266,000 jobs added to the economy. That means the real number from them is a negative 32,000 jobs. Why would they be so manipulative? Well, the market was expecting 1 million jobs. It didn't get it. It was closer to a quarter of that. So the government, trying to be PR conscious, manipulated the numbers to make it look like it really wasn't so bad, even though it was, and their own numbers show it. Hyperinflation can result if inflation just really gets out of control. And if we see that, there's going to be some real significant consequences, starting with the dollar's crash. It's just the beginning. Then the dollar will lose its reserve status and no longer dominate international trade and markets. The federal government will federal budgets will crash because it can't stand much inflation because there's so much debt out there. Then we may see extreme government reactions when the politicians finally realize the chickens are coming home to roost and they have to deal with the consequences. History has shown the results of extreme inflation. Germany was a place where this most notably happened, but there's been other places. Back in the era of World War I in 1919, the German mark was 48 marks to the dollar, which is roughly 2 cents per mark. But inflation just exploded, and eventually it reached 7,400 marks per dollar. A huge change. In December in 1922, they had a cost of living index of 685% in December in Germany, and a 17-fold increase in half a year. Humongous, friends. Economies blow up that way. So the Germans have been very concerned and careful about inflation since then. Unfortunately, that doesn't seem to be shared over in the United States. The way the dollar is valued is via a basket of other currencies, pounds and euros and yens and rubles and whatnot. So the ratio of the dollar to these other currencies is calculated, and which results in giving it a value, which is advertised. But what's interesting that the Chinese renminbi, which is a major currency in a very large country, is not included, nor is the Aussie or the Kiwi from New Zealand. The effect of this is to make the dollar look stronger than it actually is, which is what the government wants to do. But the dollar is going to fall. It has to happen. Why? Because there's a sharp widening in the U.S. current account deficit. We keep importing more than we buy. The euro's rising, and the Federal Reserve really wants the greenback to fall just slowly. They're not going to, as long as it's slowly weakening, they don't care. They're happy. They're not going to do anything about it. So we're guaranteed the dollar's going to. How do you devalue the dollar? Well, you print a whole lot of them, which means each one has to be worth less. You can make loans to other countries without any reasonable hope of repayment, and doing it at low interest rates, which means the dollar is worth less. On the international markets, currencies where there are higher interest rates are worth more because you can invest that currency in that country and get better money. Whereas a country with lower interest rates, you can't get as great a return on your money. So why do you want to hold that currency? You want to hold a more valuable one. And recently, with stimulus checks, they've just been giving that money to anyone who fogs a glass. Just total debt. That's depreciating the dollar, friends. Realize in the world, when there's an action, there's opposite reactions. And this is happening in the case of international trade and global payments because the U.S. has been really aggressive in using sanctions and tariffs. And there's some reason for this. The U.S. is trying to level the playing field and punish the bad global actors. But what's happening then is the other countries want to avoid these sanctions, which means removing the dollar from its key role is a way to do so. The dollar continues to remain the reserve currency because there's no better alternative right now. The euro is a bit troubled. The ruble has some value, but that's relatively small. The Chinese are pushing the yuan or renminbi, which we can understand, and we may be ending up there. But the central banks hold their money, hold their reserves in some sort of currency. They're decreasing the amount of the reserves which are held in dollars because the dollar is not worth so much and it's depreciating. And a banker would want to hold something which is going to hold its value better. Vladimir Putin, who's been on the receiving end of many sanctions from the United States, and there's good reason for that, but he's a smart fellow. He's trying to remove the dollar from the payments method for exports, and he's managed to get it below 50%. And a lot of this is because they do business with China, and they like doing business in euros. And of course, they're doing some in yuan. And so the international reserves of the Russians are more made up of gold and euros right now, and they're pushing out and avoiding dollars, which is very smart. So are many other countries. What we may see at some point when the politicians feel their feet to the fire and the inflation gets out of control and the markets are crashing is a digital dollar. This has already been tried in China in 3 different markets where the people's money has just been changed overnight into a digital form, which means the paper money is worthless unless you turn it into the bank or the government. All of a sudden, you're just out. You don't have anything. And when money is digital, the government can control when and how you spend it. And they've done this in places. People have money, but it doesn't have value because you can't spend it. So we may find one day our bank accounts are converted overnight, and not only they've been converted into digital dollars, the government, recognizing the huge debts it have, may have taken a haircut. And I realize this happened not long ago over in Europe, and many people were unhappy. Of course, the wealthy will be watching the money markets and probably have a heads up and be able to avoid this much more readily than the average person. One alternative to the dollar that's been considered for several years now is what are called SDRs, or special drawing rights. This would be something put together by a confab of the central banks altogether, and they would issue this, which would render the dollar just like a Mexican peso, just another local currency, not something having any particular value. It also means there'd be a whole lot of inflation. What the government is going to just push the excuse this onto the IMF. They're going to disavow any responsibility, even though they certainly were. But politicians are good at passing the buck and making excuses. But who owns treasuries? All this debt that the government is selling. Well, only a quarter of it is owned by foreign countries. It used to be over a third, but they're smart. They see what's writing on the wall, and they're getting away from it. The Fed owns over 70%, more than double what it used to. When you think about this, the Fed's issuing debt and they own the debt at the same time. Doesn't make sense, but these are the kind of games, shenanigans that are going on in Washington now. Tax havens own some, government pension funds own 22%, but note that's less than half of what they used to have. Even the government's getting a bit shy of its own debt. The rest of it's owned by U.S. banks and various entities, bond funds, pension funds that are going to have obligations to pay out. They figure, well, treasuries are safe. It's the safest thing out there, so they put their money there. And various hedge funds and individuals. So close to 1/3 is held by Americans. It's individuals. We look at it here at a chart illustrating this, and you see U.S. investors are the ones increasingly on the hook for this debt of dubious value. The foreign holders are pretty stabilized. When the government issues debt, the banks, the making up the Fed, have to sell these treasuries. And they don't just have to sell them once when they expire, which can be as short as 1 year, as long as 30 years. They got to be sold again, at which point they get repriced to whatever the market demands in terms of interest at that point in time. But the market's been drying up lately. Interest rates are jumping up. This year, and it's February 25th, 2020, 10-year Treasury leaped from 1.41 to 1.6% in one day. And you may think this is not a whole lot. Well, percentage-wise, it's pretty significant. And if you look at this on an annual basis, over 400%. Well, no markets can deal with those kind of rates, friends. So that caused a lot of concern. Why did this happen? Because the market for treasuries was drying up. People didn't want to buy them. And the solution to that is raise the interest rate. Interest rates and bond prices are like a seesaw. When one goes up, the other goes down. When the dollar loses its reserve status, which has been anticipated by many, that just hasn't happened yet, and there's no clear replacement, it's going to create global economic turmoil. Investors are going to get their money out of the dollars as quickly as they can to other currencies or other assets like gold and commodities. And the demand for treasuries, it's going to fall, which means interest rates go up high, perhaps very high. Import prices are skyrocket, including commodities like oil. One simple example is currently in the United States, people are complaining about paying $3 or more for gas. Well, people in Europe have been paying $8 for years, and they're used to that. And here in America, people go blithely on buying SUVs that suck gas, and they think nothing of it. There's going to be a day of reckoning, friends, when real prices hit us, and people realize we've been getting bargains for some things, and they're not able to continue forever. We find the 10th commandment in the 20th chapter of the book of Exodus, verse 17, which reads, "You shall not covet your neighbor's house, you shall not covet your neighbor's wife, nor his male servant, nor his female servant, nor his ox, nor his donkey, nor anything is your neighbor's." Friends, we need to stop coveting. We need to obey God. But we're greedy, and we want someone else to pay for it. It motivates us. And it motivates politicians to please us, trying to get what isn't ours. In Deuteronomy, we're cautioned, for the Lord your God will bless you just as he promised you. You shall lend to many nations, but you shall not borrow. You shall reign over many nations, but they shall not reign over you. Friends, the other nations are going to be reigning over us because of our irresponsible spending, because of our constant. The question I'd like to leave you today is, are you willing to work and wait, or do you want to spend what you do not have and burden future generations' wealth ourselves? Friends, we cannot keep on with this irresponsible spending. Spending what we don't have. It's going to be cause major problems, and maybe not in too far distant future. Maybe we get back to obeying God and being responsible.